Good morning. Welcome back to Forex Focus. It's Tuesday. I'm Glenn Freibarger. Joined with me, Peter Momat, back again.
Good morning, sir. Good to be back with you.
I'm glad to be here.
Yeah.
And glad not to be doing back-to-back 6:30 shows. Thanks for coming back.
Is that what the?
I did. I didn't appreciate it.
Is that what Attila the Hun? And the minute he's in charge,
Yep.
It's unbelievable. Wow.
Yeah. No, he was carrying like a little ruler as a ruling stick.
Oh, he was doing the nun thing.
Yeah. No,
Oh,
he was.
I thought it would be more medieval, but sure, he wants to go nun. That works.
Yeah. No, it was a good time, but hope you had a good time.
Had a great
as well.
time. Very, very good. Missed all the action. Lots to do. Is still continuing. Lots to do. We got a ton going on. But you had I missed the whole St. Patty's Day thing. Made it late down south for this Southside Irish Parade, which I was excited about. That was great to.
Did you?
No. No, I didn't.
Yeah, I changed my flight to get in for it.
We barely got out, so it was luckily we did. But
Yeah.
So you went down and you had a great picture of you with the Green River in the background.
Yes.
What time did you start?
I started the festivities at 7:48 a.m.
7:48.
a.m. We had a little bottomless brunch buffet type deal on the roof of the Godfrey Hotel starting at 8.
Oh, wow.
And I had a lot of, it was 4 hours. And yeah, it was actually worth it. If you get your ticket like really early, it's not that expensive, but then, they ramp up every day. So the stragglers really pay for it. But we had a large group. I had probably 25 people with me at that.
And of course, you being technologically advanced, you went in. Again, you go into these crowd environments, high tech, with the walkie-talkies. Well done.
Yeah, we
Kudos to you.
don't we don't mess around. So it was a large rooftop. There are 2 sides. We have a big group. So of course, on the east wing and on the west wing, we made sure we had 4 walkie-talkies to communicate. I don't know. I was betting that they wouldn't let us in with them. And everyone's like, what do you mean? It's like a phone. I'm like, it's the most obnoxious thing ever. It's hysterical. But walkie-talkies still do work, and they've got like a 4-block range on them, even through the buildings and stuff.
Well, there you go. See, now we were at the beach, and I sent my oldest daughter came with us.
Nice.
She was getting something for her mom, and somebody else came by and took care of it. So I'm yelling, Samantha, just to get her attention, to get out of line. And she's like, Dad, what are you doing? You're yelling at the beach. I'm like, who am I? I mean, is it taboo to yell at the beach?
It is.
I guess it is.
But yeah,
should have had the walkie-talkie.
Would have been a lot cleaner if just Samantha over. We're all good to go on the beachfront.
Unbelievable.
Yeah.
Okay, so you started at 7:45. When did you power down?
Powered down 10 p.m. But it was a slow decline. So we went there. We went to another establishment, Tao. Weird.
Oh, you went to Tao?
Yeah.
Did you really?
I did, yeah.
All right, that's an interesting mix to pick on St. Patrick's Day.
It was very interesting to be there at 1 p.m. Pretty funny, but then we were only there for a couple hours because we were.
What is that place like inside? Just because that building's been around forever.
Yeah.
That used to be the Cardinals' residence.
Really?
Yes.
That would, that
and it
makes
was
sense.
a place called. Oh man, Beth, what was that place called? Do you remember?
Not sure.
Was it Excalibur?
Oh, yes, the club.
Yeah.
Nice.
Yes.
Excalibur, and they used to have like women in cages dancing and stuff. So
I could see that.
Yeah.
But there were none of those.
no
there.
cages. It's a little.
But it was huge. It was all green flashing lights. Ton of people in there. It's insane. But then
So you went 15 hours straight.
I suppose. But then after that we were hosting people at our house.
And you could stand at that point?
Yeah, but then I can also be on our couch. We moved our indoor couch outdoors again, so that was. But yeah, we had like 60 people over, so that was kind of a lot. But at least then you're home. You're not like fighting crowds.
Yeah, sure. Let's go with that.
So,
my God.
It was a great time. I had a few friends fly in, stay with us. They all made it out. Only one person forgot one of their shoes.
And the missus stayed
She's-
with you step for step.
She did, yeah.
Wow, this is a keeper.
I know, yeah. She had
Look
a
at
lot of
that.
fun. And my friends didn't scare her
Because
off.
sometimes you go on a mission like that,
I was worried.
there's collateral damage.
I was afraid.
Look at you.
But yeah, we made it all out.
Well
Smooth.
done. Now, what
soft
is the
landing.
bet? Now, our friend Frank is going to Japan for, what is it, 11 weeks? And he's got a whole event journey plan where
Yeah.
he's staying in all these, kind of the equivalent of a bed and breakfast along this trail. It's supposed to be
Right.
incredible.
The Appalachian Japan.
Yeah, so there's like 6 stops. Have we started the pool yet? And what's between which of these? I think they're called daikus, but I could be completely wrong. Does his girlfriend
It's
kill him and dispose of the body?
it's a good point. I didn't realize, that the hiking days are all back to back.
Yeah, and it's
he made it.
7 to 15 miles. And I will bet you a nickel if we look it up. He
Yeah.
over-engineered that number. That
sure.
seems like way too much.
That's intense. But I agree, but I could also see him booking something insanely intense and being like, it'll be fine.
Well, he
And
is.
it's like, oh, actually 4 people have ever done this in successive
He's
days.
a driven individual, so
Yeah.
it could be.
So maybe he they stay an extra day at the spa or something and their luggage leaves without him.
Oh, that's right,
and
because at every place they've
Yeah.
got the hot mineral springs, which have a healing benefit to
He's
them.
expecting some sort of magical rejuvenation. We'll see.
Yeah, that's
I'm
going to be
excited. You're going to lend him a GoPro, right? So,
just,
and we'll have it
just so
live
we can find
streaming.
his body easier. It's
Exactly.
got a GPS in it. I'd
Yeah.
like to know where, if she does drop him somewhere,
The
where that is.
Life Alert X.
No, his
GoPro.
girlfriend's a sweetie. So, well, let's get over to it because the markets continue to move. Euro, wow,
It is.
hard time getting through 107. Now does it get through 110?
We
Quite
are
a move to the
flying.
upside.
Yeah. I mean, as it lands this week, currency markets not up and moving as much as they were last week.
Felt quiet yesterday.
did, yeah.
Just because it was one way, but I couldn't believe Kiwi was up almost 80 pips.
Yeah,
Which
like-
was a big move with no pullback whatsoever.
No, yeah. Especially right past that psychological 58 level.
Right. Yeah. And they really backed off a little bit overnight, bit into it again, and I think it's just coming off ever so slightly now. What do you think? We've got FOMC on Wednesday.
Yep.
We know they're not going to do anything with the rates. They will talk, but what they say, who knows? Dollar yen actually having a little bit different price action here. What are your takeaways from? Is obviously a lot of dollar selling going on.
Right.
U.S. equities bottomed on Friday. They had a decent day yesterday. They're starting out today, not in a horrible spot. They're off a little bit, but not, they're 10% off those highs from yesterday, but that was a nice move to the upside. So, what do you find interesting within the currency landscape right now?
I mean, dollar yen is the pair to watch this week for sure for me, just because we've seen it move independently of a lot of dollar
Right.
stories, seen a lot of dependence on U.S. rates. And what do we have on the docket this week? We have a Bank of Japan meeting tonight, and then rolling right into that FOMC tomorrow. Not sure exactly when if it'll be on the Bank of Japan meeting that could surprise, or the FOMC meeting, but we should see some rate sensitivity around tonight and tomorrow, and I would expect that to play directly into this dollar yen market. We've seen a slide here. We're looking at the weekly. Can pull it into the daily. We've definitely seen some more momentum downward, a lot stronger moves to the downside, but a fairly resilient bottom here below 148. Haven't really made that the new price level. Now we're staring down 150.
So is yen do you think, the dollar yen is stronger, so yen is a little bit weaker recently. Euro continues to be strong. The Aussie Canada really had solid days. Aussie Kiwi solid days. Canada still is kind of held back a little bit. I think the tariff beef seems to bite into it a little bit still. this turn in the yen, do you look at this as, is the yen leading the rest of them? Should we expect the other ones to roll over, or is it going to be the slow grind until we get through these two data points? I honestly, I haven't looked. Are they expecting another rate hike out of Japan tomorrow night or not?
Not tomorrow, at some point this year, but
Okay.
that's been pushed back to Q3 last I checked.
Okay.
Yeah, not sure if this could be the leading indicator, but what I think will be really interesting this week is after these events, we could maybe make it could be a little clearer what the sentiment is around this pair, what is flight to quality, and what is just pure rate differentials. Just because we saw, if we're considering the move in equities, if some of that fear gets shaken out in the U.S. equity market, and as a result of the FOMC, Powell saves the day again, everybody's happy, then I would look to this pair and just note the price action and say if there wasn't any reaction in rate expectations, but we do see a big move here, then maybe the price action of the past couple weeks has been a lot more flight to quality, safe haven appeal in this yen,
Okay.
and we could see this get all the way back up to this trading range of 154. But if Powell and the Fed confirm a lot more rate cuts to come, then we could see some more strength in this yen. I don't think anything's really holding this market back, but it'll see what drives it. Will be interesting for me.
Okay. Sterling a little bit weaker, while euro is still holding on the bulk of its gains.
Still a pretty consistent daily chart here.
Yeah.
And good call out that Bank of England also a rate decision on
Thursday,
Thursday.
right.
Nothing expected there. Haven't been tracking that one as closely, but
So with the market, again, and we talk about this, the market moves just not on the changing rates, but the expectations of the trajectory.
exactly,
They've built a lot of change in here.
for sure.
Currencies become elastic when they hit new ranges. And while you could argue we've been above and below 130 several times last year, so is this a new range? I think we're at the upper end of a range that we've consistently traded at for the last 6 months. So, again, 130 is just a big round number. It's not that indicative, but it'll be interesting to see how we play through that piece as we go through. So your eyes are focused on Japan coming forward. During the FOMC meeting, where do you think the play is? Is it euro rich at 110? Is it rich at 110? Or, again, see, for me, I look at 102 euro was awfully cheap. And yes, when it was at 102, everybody was talking about par. But the euro spent a lot of time between 108 and 120. So I think when we the move has been impressive. It's been 5 handles in a short amount of time. Pretty much, it's given the deft trader a couple of 80-point pullbacks
Yeah,
to cover. But if
you
you're
gotta be
looking,
quick.
you've got right. It gives you that, which is a pretty good range, but it doesn't give you that for 2 days. It gives you that for half a day, and that's an interesting takeaway when you talk about momentum. Is that the markets do roll over, but if it doesn't stay there for long, it talks a little bit about where energy lies, and it's a little bit. It continues to be a little bit to the upside. So, do you think do we challenge any of these ranges pre-FOMC, or in terms of challenging them, do we get through them? Because sometimes I've seen, again, you got the event, but the price level drives. It doesn't wait for the event. In
Right.
other words, right now you've got to argue that, again, the challenge hands here is anybody who's short or needs to buy to hedge. And they can test the will of those people and how much pain they're willing to bear at any time. So I think it felt quieter yesterday, but the movement in, again, a different set of underlings was pretty impressive. So I know you've got some slides for us. What do we...
I do, and we've talked about a bunch of pairs here, but the one that stole the show yesterday, today we're going to be talking about Australian dollar, New Zealand dollar surging on Chinese stimulus, along with U.S. fear. This has been an interesting story to watch. Commodity currencies, that's where we've seen
Right.
the price action, at least end of last week, rolling into this week, and now you talk about ranges. We're seeing possibly the establishment of a new range in the Kiwi dollar here above 58 cents.
Right.
And this year-to-date high, and this is coming off of historic lows for this pair to start February. What do we make of this year-to-date price graph?
I mean, the last week of price action has been great because we've spent the bulk of the day and going out the end of, like yesterday, we went out 3 pips off the highs after an 80 pip run. That tells me that 9 times out of 10, when you roll into the evening, you're going to be able to sell them at the same point or higher, which is exactly what you were able to do. There seems to still be a fair amount of energy. 58-cent Kiwi is not, again, it's certainly higher than 56-cent Kiwi, but that's still awfully cheap. Is this catching up, or is it a different set of factors? Right. It's never just one thing, but I think this was, because when you looked at the bottoming here, we had 3 different levels when you go back to the end of the last year and the beginning of this year, one in Jan, one at the start of Feb, one at the start of March, where it really hit hard. Now, did it, in Feb, it punched new lows. That's where we got that brief print right above 55 cents. But it refused to necessarily hold on to the gains. I think now you have to kind of, it's great context because you're not buying the stone cold load. You're not buying 55.5s or 56s. Did I miss the boat? I don't think if you look at that, this is going to be a very tough thing to trade, because then you're going to say, well, if you missed the boat buying it, I'm going to sell these rallies because they're off-sized big. Selling the rallies right now is a very tough exercise. If you did that in Kiwi, and I did yesterday, and it didn't work well because it just went a pip every 5 minutes, higher. Tape action wise, this isn't a market that necessarily is going to really lead to the downside. I think you have to accept the fact that very rarely do you pin the low or pin the high. 58-cent Kiwi is still awfully cheap. Are we susceptible to a pullback? Yes, but what we've seen is pullbacks to, when we pull back to 57 cents, we didn't put in new lows.
Right.
Didn't spend a lot of time there. And we immediately generated energy higher, which I still think, like with Euro, when we traded through 109, there was a sense of, boy, that's 105 to 109. That's awfully fast. And it was. But they put another 100 pips into it almost.
Yeah.
This is going to be a case where you've got to accept the fact you're not going to get the lows, but you're getting the lower end of a range. And you want to be able to never box yourself to only trading one side of the market. Well, I can't buy it because I didn't get the 56 cents. Don't think about it that way. You got to work around. If you do get a little bit of a pullback here, 57.70, 57.5, then the question is, does it spend a lot of time there? If it doesn't, that shows you there's more energy in this market trading to the upper side. So it's hard to do, too. It's hard to say, well, no, I'm bullish. Well, why wasn't I bullish at 56 cents? Because it felt really heavy.
Exactly. Especially off of that gigantic gap lower.
Absolutely. So you kind of take what the market gives you right now. And this still, when we look at, getting back to 61 cents just takes us to the election levels. Aussie is going to look the same way, and I know we're going to look at that too. Same story there. So you can't trap yourself that the market's moved too fast to the upside. I wanted to be long. I missed the bottom. Now I can't be long. That's never the case.
And you have that recent example of elasticity in recent weeks in the euro.
Absolutely.
Where you could have played this exact same exercise. And that move was over a handful of days, a number of days, from 105 to 109. Yeah. So definitely some recent examples of why this could have some more legs. And one of the storylines behind it is Chinese equities. We're looking, this graph on the left is the FXI, China Stock ETF, which looking at this graph all the way back to April of 2023, highest levels, seen a lot of stimulus at the start of the year. I think it actually started in fall of last year, but continuing to see a lot of momentum there. And if we zoomed out this graph, you'd see that while it's the high of the past 2 years, it's been higher in
A lot higher.
2021. Yep.
Right.
And so a lot of room to run there. And then on the right, we're seeing the correlation, rolling correlation between these equities and Australian dollar.
And where'd you go? What time frame did you go on the correlation?
I think this is a 30-day rolling.
Perfect.
Yep. And so we've seen consistently positive correlation here to varying degrees. But this is the past 15 years here. So definitely seeing this story play out in a positive manner here. So no surprise. But we've had a lot of things holding it back, holding these markets back. One of them of which is this U.S. fear,
Right.
The recent scare in equities coinciding with here, looking at the 2-year Treasury yield, a big fall there. And falling interest rates like the 2-year can either be good or bad for investors, depending on the economic backdrop. Here, what it's looking like is a lot of flight to quality and risk off sentiment,
Right.
which we've talked about in previous segments, can really directly play into the Australian dollar pair, which is positively correlated with VIX as well. What do you make of this interest rate piece?
And you're kind of getting a little bit of the perfect storm. The rate trajectories have gone from possibly higher to, I think currently right now, FedWatch tool has between 2.5 and 3 rate cuts.
Yeah.
That probably came out a little bit yesterday with the continued bounce in equities, but the trajectory is flat to lower. So you've got a situation here where it's flat to lower. Now, New Zealand has still kept the door open to further cuts. But I think when you look at the combination of U.S. flat to lower, you look at the FXI, does it work perfectly? No. It's a 50% correlation, but that's a solid one. It's one we look at.
Yep.
And when that starts, and you make a good point of context, as FXI is traded at much higher levels, but not in the recent window of relativity. And
Right.
that means two things to me. One is, sure, it was higher, and it can go higher again, but that is now getting more elastic since it's gotten to a new range. I would imagine we'll continue to see the Kiwi and Aussie become a little bit more elastic. So these all are, this is great context because you can't, your Kiwi trades don't strictly come from what FXI is doing, but getting some context around as markets reach new levels, and we're seeing Kiwi at a relatively new level for 2025, FXI at a new level, both of them, 80 points in Kiwi was a lot yesterday,
Right.
88 at the high, 88 pips, excuse me. You're starting to see a little bit more uncertainty come in, which is good for us as traders.
Yeah, and now just zooming out here to this Australian dollar, you have any way you want to play it.
Absolutely.
We have, if you believe there's more legs to these Chinese stocks, and the U.S. fear is taken out of the equation now, if we're coming out of these recession fears, that kind of blocker of risk-off sentiment is cleared out of the way, and this correlation to Chinese stocks continues to pick up. You have a lot of historic upside here in this market, all the way up to 68 cents, 69 cents, and that's when we were looking at, this is just last year, we're looking at the Chinese equities not being this high in 2 years, 3 years, so this backdrop has a bullish case for it. But on the other hand, if we see the interest rate fear and recession fears in the U.S. take over, that could completely cloud the positive momentum we've seen. So it's nice to see back at 64 cents, kind of in the middle of this range.
Yeah.
Could take it either way.
Absolutely. And in November, we were back to 67 cents, as you said. So is there more room to the upside? You didn't miss the boat. There is the possibility for more room. There's a fair amount more room in Kiwi. Kiwi actually took it harder to the downside.
Yeah.
So is there a trade in Aussie Kiwi? We'll take a look at that later on this week, because that's one where, again, these are dollar pairs. We're looking at Aussie US, Kiwi US. Is the currency pair itself, Aussie Kiwi, we know it's a lower beta pair. It moves a little bit less,
Right.
but it could give you a little bit nuanced exposure into this kind of market too.
Great call out. A lot of pairs to watch this week as we're into FOMC, but that'll do it for our Australian dollar, New Zealand dollar forecast. Up next, we've got Tom, Tony, and Vanetta. Stay tuned.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy.
Yeah.
Like we drive like
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, it's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
All traders are free market freaks. It's the lifeblood of risk takers. Nowadays, though, I still wonder how a productive free market economy will evolve to face the challenges of a more complex and divided world. So sure, I'm a bit concerned. In fact, as I think about the growth of digitization and AI, I know things are about to change at a pace we probably can't fathom.